Good afternoon. This is Clark Neighbors with the market commentary for the final week of August. Summer's about behind us, believe it or not. Harvest around the corner. Interesting week, mainly factored in with the macro side of the equation. We will get to that in a second. For the week, fairly quiet as far as the grains are concerned, considering everything else. Dees corn down 3 cents for the week. November soybeans down 4 cents. December wheat down 20. For the month, corn's only down 7 cents. Beans down around 55 cents, and wheat a little over 20 cents. We've seen a little more pressure in the beans and the wheat versus the corn. Corn stability seems to be very strong at this point. On the macro side is the equation this week, led by that major move on Monday, with the stock market being down over 1,000 points early, and some other factors that was kind of a sell the world mentality early in the week. We seem to have stemmed that. And a lot of this is based off of China and the concerns for growth and the big macro picture in China and how that ripple effect affects the rest of the world economies, affects the Fed increasing interest rates, etc. And without going into a big long story on that, gives you kind of synopsis of this was a week where the macros drove the market. In fact, crude oil had a weekly range this week of over $8, which is 20% of the value of the contract. Soybeans was about a 34-cent trading range this week, which is about 4%. Corn, 21 cents, which is about 5.8% of the trading range. So obviously the energies were the player that took the biggest impact, if you will, on this macro side of the equation. So early week volatility, lots of noise. As you get to the end of the week, was it that big of a deal? Going forward, though, again, watch the macros match the dollars. I mean, that's been a theme and off and on in this commodity world for the last several years. Corn harvest is just beginning in the South. Slowly going to move its way up in the Midwest here over the next few weeks. As that progresses, the market's going to want to see what yields are coming out of the field. I think that's helping support the corn market to some degree till we have more information at this point. Movement continues to be okay. Very limited movement, though, for the time of year. I was at a meeting in Illinois this week, and several customers and elevators were talking about the amount of farmer stored grain, old crop grain, in the elevator is somewhere in the range of 2 to 8 times larger than a year ago at this time. We'll get a better feel on that when we look at the stocks number at the end of September. But the market structure continues to be the producer is not wanting to make any marketing decisions. And with the corn market being as flat as it is, makes it more difficult for those decisions. And our feeling going forward, if you look at December corn, you take out the summer rally between the latter part of June through the latter part of July, when the corn market rallied from under $4 to up in that $4.50 area, back down rather quickly. You take that away, and basically since the crop went in the ground in late April, trading range of Dees corn, give or take, has been about 365 to about 388. So fairly narrow range. What's that mean going forward? That probably means as time passes on, it's going to be harder for producers to make decisions with that flat of a market, especially during the harvest season, if we stay in that range or even go lower. And what that presumably could mean is we see better basis levels from time to time in certain markets to get grain to move. So that's going to be an interesting thing going forward. Again, keep in mind there's a lot of grain in storage in the elevator on the farm, and for this time of year, and that's going to be interesting how that flows through. So basis could be a little better from time to time, and that could have some impact on logistics and movement. So that'll be a storyline as we go through the crop year. Especially with this range-bound market. Also, those of you that would like to learn more about selling options, that may be a way to producers anyway looking at trying to capture a little premium in this market in range-bound trade. not a bad way to do it. But going forward, whether it's corn or soybeans, movement's going to be a key ingredient as we go along and look at harvested values as far as yields are concerned. One final note on yields, and here in the office we spoke a lot over the last few years about how the Corn Belt has moved to the Northwest over the last 10 years due to the explosion in the ethanol industry and also better variety. So you have more corn grown in the Dakotas, in Nebraska, in Minnesota, to some degree Iowa. And when you look at crop conditions this year versus last year, interestingly enough, the noise of the issues, which those issues are real with the variability in the East and Indiana and Ohio specifically, which according to USDA are down 275 million bushels from a year ago. Minnesota by itself is up 250 million bushels. The northwestern Corn Belt looks very good this year. So it's going to be hard, as you can see by some of the crop tours and by the USDA. It's hard to balance that out, knowing exactly where that yield number may raise. So again, going forward over the next week or two, watch the macros, watch the dollar. Chinese growth is the storyline there, has not gone away. It's going to continue. If you have any questions on any of these markets, feel free to call us at the office here in Cedar Rapids. Phone number is 800-373-2525 or on BIScommodities.com. With that, have a great weekend.